Have you seen this color of green on the Indian bourses for a really long time? No, I haven't, and I'm very happy about it. Welcome to Countdown. I'm Neeraj Shah, and there is a lot of green on the screen today. Quickly look at the charts. 7.2% higher for the Nifty 50. The banks, which have over the last few days underperformed, are actually outperforming marginally, 7.89%. And mind you, this is despite Reliance Industries being up 20%. So Reliance is not contributing to the bank index, and still the banks are outperforming the Nifty. That tells you about the kind of gains that are happening in some of the other names as well. I just very quickly pull up the volumes picture in today's session as well before we move on to the specific stocks. Look at this, 33,000 crores done. So you'd probably nudge closer to 45,000 odd crores in the last 1 hour of trade left, and therefore you'd probably close the day at around those levels. And the NSE volumes slightly muted, but the cash market volumes a bit healthy. Bring up the heat map on the screen and show you what's moving and what's not. Well, a handful of names still in the red, the likes of IndusInd Bank and Coal India, but those are few and far in between. The gainers, it's an impressive list really. Reliance is up 21%. The last time that Reliance did this was back in May 2009. Since 11 years, they've not had such a strong move. And we've been used to now these records getting broken. But the reason why banks are doing well, or the Bank Nifty is doing well, Kotak Bank up 12%, HDFC Bank up 9%, HDFC itself is up about 8%. There is strength in Axis Bank up about 8%. And then the non-banking names like Bharti Airtel, for example, are clocking in some gains about 8% higher. UPL is about 10%, Grasim about 9%. So it's a very strong show. Financials like Bajaj Finserv and Finance too are doing well. The going is good for the time being. Let's see if this lasts. Well, joining me on the show today, and we took social distancing very, very seriously, Devina joins in from her home. Devina, good afternoon. What a day.
What a day, Neeraj. The first day I decided to sit at home and the market runs up about 7.5%. But I guess this is the need of the hour, so this is what we also have to adhere to. But rightfully put, today is a soaring day for the markets, and I guess, putting a timeline to this by saying we sit at home for 3 weeks, we can probably see something in the anvil, and also expecting the government to do something with regards to some kind of economic stimulus. But aside from that, aside from the big wigs that are already adding weight to this rally, a few names from the mid-cap space that are doing well include the likes of an ICICI Prudential, which is up 20%. You've got NIIT Tech. NIIT Tech, this is the second day in a row that it's doing well. That's up 18%. Century Textiles, a small name there. Muthoot Finance, 13% higher. Castrol India, 12.5%. Real estate as a pocket has started getting active. So you've got Godrej Properties today, which is up 12.5%. Interglobe Aviation, too, about 11.5% higher. You've got Piramal Enterprises, Hathway. You've got TV18 or Jeevan Financial Services, 9% higher. A gamut of stocks, actually, which are doing really well in today's session. Chambal Fertilizers, India Cements, EIH, these are the names that are up 7 to 8% apiece. Avanti Feeds is the other name that's holding up. We do still have a few stocks which are looking weak this afternoon. The likes of Gati, which is down about 15.5%. Roman Logistics is down 14.5%. You've already highlighted banks, but look at Yes Bank. It's not a day for Yes Bank today. It's down about 13%. PNB is down about 5%. So a handful of banks which are not doing well. And then some of the pharma names are taking a back seat today. So you've got a Cadila Health, which is down about 5%. And Edelweiss continues to look weak. That stock, again, another 5% lower, Neeraj.
Yeah, well, let's get in. Gautam Duggad, he's head of research at Motilal Oswal Securities, joins us right now on the show with his thoughts on what's happening with the markets currently. Gautam, good afternoon, and this is indeed a good afternoon if you were a bull. What explains this? Is this the impact of the Fed stimulus plus the market believing that the measures taken by the government would help contain the impact of the pandemic?
Hi Neeraj, good afternoon. Hope all of you guys are safe.
Touchwood. Yes, thank you.
Yeah, I won't try and apportion the credit for a day's movement, but it's good, it's welcome. We should take it. The more it comes, the better it is, because we have seen a lot of selling in the last 1.5 months. I don't think we have ever corrected 40% in a month or 40 days time period. So maybe there is some fatigue of selling as well, plus the Fed stimulus plan. Yesterday's Prime Minister's emphatic speech that this lockdown is necessary, and probably people, it can be anybody's guess. People are, trying to find a way out of this situation. Most people believe that we have been ahead of the time in taking containment measures, and hopefully we shall avoid this crisis and come back stronger out of it. As far as government's relief package is concerned, we'll have to see how it goes. But clearly, I think the sharp selling that we have seen has created a very natural, reaction. And typically, if you look at the crisis in the past, 2001 to 2008, 2013, we did get a lot of sharp, intermittent rallies in an otherwise downtrending market. So I won't read too much into one day's movement, even as I, feel happy and, welcome this. Let's see how this next couple of days passes by, because the mother market, as far as US is concerned, has seen a lot of cases on a daily basis on the coronavirus front, but they have seen equally strong reactions from the authorities on the fiscal and monetary side. On our case, we have so far seen very strong reaction on the health side, which is needed, and it's quite good. But so far, we've not seen much action on the stimulus and package front, which I am sure in the next couple of days we should hear more about it.
You reckon banks would be taking a leaf from that as well, because the bank Nifty is, after a long time, outperforming the other markets, Gautam? I mean, is this an expectation of some bit of forbearance coming in which could help, and therefore the kind of momentum in the banks today?
Yes, I mean, see, if you look at the financials, over the last 8 or 10 days, financials have been punished a lot. It's not often that we see HDFC Bank falling like what we have seen in the last 10 days. Very rare to see Kotak Bank correcting like that. So I think a lot of the pain is already reflecting in the financials. I'm not saying this is the bottom. Nobody can say. Probably the prices may fall, continue to fall for some more weeks or months, who knows. But at least, after the 40, 50%, 60% correction in a lot of the financials, I think people are taking a step back and reassessing the situation. And there is also hope building up that RBI will provide some sort of forbearance and relief to the lower middle class and poorer section of the society. So I think after the fall, people are reassessing, doing some bit of value buying / nibbling, because there is extreme fear and very juicy valuations. Typically, this combo in the past, if past is anything to go by, this kind of combination of extreme fear and juicy valuations have provided a very strong launch pad for long-term investors. I'm not saying people who have a 3-month view, 6-month view will come out better out of this, but certainly if you have a 3, 5, 10-year view, I think a lot of sectors today are offering that kind of opportunities. And particularly with respect to bank, I think it's more a reaction after a very sharp, severe fall that we have seen in very high-quality names.
Right. And that's probably what everyone has been saying, Gautam, that it is about whether or not you can ride this volatility through and then come out with disproportionate profits on the other side once we have a bottom in place. But, I want to specifically talk to you about energy. Now, that's the other piece of the puzzle. While we're talking about the health crisis that's been impacting the globe, and crude oil prices, that's the other element which is driving prices for the likes of Reliance and the other oil marketing companies as well. What's your take on the same, and when does that normalize? Or do you see that normalizing at all?
See, Devina, it's very tough to predict when things will normalize, because none of us could predict a month or so back that Nifty will fall by 40%. So to presume that we can predict when this thing will settle will be a little, unfair on our own, abilities to predict. What I can say is from an investor's viewpoint, right now it's better if one can look beyond cyclicals unless somebody has an expertise on entry and exit. Because cyclicals, you need an extra skill set of entering and exiting as far as prices are concerned. As far as I am concerned right now, we are focusing on very high quality names where valuations were a deterrent a month and a half back across sectors, and which people wanted to buy. Those stocks were part of their dream wish list, which they couldn't buy. And now those stocks have corrected 30, 40, 50%. This is the time to add up on those names. As far as cyclicals like metals, oil and gas, capital goods, infra, real estate, those kind of sectors are concerned, I will still wait and see how things settle, because even after things settle on health pandemic front, I think the economy will take its own sweet time to reverse back to normalcy. So there is no hurry in going and buying it unless you have a very strong expertise in forecasting commodity prices. Cyclicals I will still avoid.
So Gautam, if I'm about to ask you, what are those indicators that you are specifically watching out before you start to say that, okay, now maybe things are looking like they could normalize? Today's rally could just be the dead cat bounce in a larger falling market. But while we're seeing growth that's not going to come back anytime soon. Maybe just seeing the cases petering off, or maybe just the fact that we have stable number of infected people, or the mother market, like you said, where there is some improvement. Will those be the elements that you're going to be watching out for?
Yes, partly that, how the cases progress in US, because that's now turning out to be an epicenter. As the WHO also said, New York is becoming a bit of a challenge right now. So that number is important. Secondly, in India itself, we will have to keep a close tab on how this cases progress in the next 8 or 10 days as private labs test more people. And at the same time, we will have to also keep an eye on fatality rates, because that is very important. So far, I think we've handled this crisis so well, touch wood. So I remain hopeful that we come out of this situation even better and stronger. From a market's point of view, obviously, those are few data points that one will have to keep a tab on. And at the same time, incrementally, how the government now reacts to the economic, measures, what all measures are getting announced, which sectors benefit out of it, which sectors are provided relief, is it consumption, is it airline, retail, lower section of the society, is it direct benefit transfer, cash transfer. Those are the measures that we will have to keep an eye on. But no denying that while we remain while we are in an uncertain environment, and therefore anybody's ability to predict a bottom is obviously questionable. But as at every downtake, the long-term opportunity becomes even brighter and brighter. Because just remember, compared to the earlier crisis, either 2008 or 2013, we have a very strong forex reserves. Crude oil prices, once this dust settles, are going to work in our favor. So unlike earlier crises where there was a run on currency in 2013 or in 2008-10 when forex reserves were not as high as they are today, fundamentally things are far more calmer, far more stable as far as macroeconomic prudential parameters are concerned, be it currency, be it crude oil prices, or be it forex reserves. It's just that these cases which are coming on a daily basis, not just in India, but in other markets also, they need to see a peak out trend or at least flattening of the trend. So market will then get more confidence, and perhaps then more normalcy can return.
Okay, Gautam Duggad, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. That's Gautam Duggad of Motilal Oswal. Let's get in. Ruchit Jain of Angel Broking joins us right on the show. Ruchit, I don't normally do this, but I'm tempted to ask you before I talk about the markets, Reliance Industries and the kind of move that we've seen in that stock that's helping the index spur higher as well. What's the call here?
Good afternoon, Neeraj. Well, yes, certainly, this kind of move that we've seen, it's very rare that Reliance Industries, a large cap stock, shows 20% move in a single day. But yes, if you look at one thing that it has certainly helped the market to show some positive momentum. It's not only Reliance Industries, this kind of move has also been supported by some other good large cap stocks as well. Technically, if I look at this, I would take this as a pullback move, which should get extended towards 1200, 1250 kind of range, where again there would be some sort of resistance coming in. But as of now, I would take this as a positive since the volumes are also good, and 1200, 1250 could be the target areas for short-term trades.
All right. So let's talk about some of the other names. And since we already spoke about Reliance Industries, today's big moves have come within the banks, and the likes of Kotak Mahindra Bank up 12.5%. You've got HDFC Bank up almost 10%. Is that looking encouraging then for the bank Nifty, Ruchit?
I think yes, before we come on to the stocks, one thing that I would like to highlight is the FIs selling and buying, which has been taking place in the index, which has since last couple of months. In last two series, they have been net sellers in index, which in fact at the start of this March series, bounce ratio was around 12%, which had even discussed earlier. That means that only 12% of their positions were on the long side and rest 88% were on the short side. Now, if you look at last 1 week, for most of the series they were on the short side, but in last 1 week they have covered some of the short positions, and yesterday's data was quite interesting. They were created some fresh long positions and have done good amount of short covering, due to which the long short ratio, which was around 12% at the start of the series, now stands at 53%, which means 53% of the positions are now on the long side for FI's index futures position. I think this is some sign that they have been covering their short positions and have been creating some long positions as well. Now, if you look at the data of Nifty and the Bank Nifty, then in the recent fall in last couple of weeks, the shorting was more aggressive in the Bank Nifty index, because the open interest addition was there in Bank Nifty as the prices were falling. So now when we are looking at some short covering moves, certainly where there were more shorts, the covering would be there first. So that's why we have been seeing some sharp up move in Bank Nifty today as well. I hope that today also we would see some good short covering and fresh long bit of figures by FIs at the end of the day. But if I look at the levels, then minimum retracement levels technically comes around 23.6% retracement of the previous fall, which is giving a target projection somewhere around 19,600, 19,800 for Bank Nifty and 8,600 to 8,700 range for Nifty. So I think this pullback move should get extended towards this minimum retracement level.
So are you buying then, Ruchit?
Also, I have a couple of buyer recommendations. As of now, we are advising our clients also to focus only on large cap names and less on mid cap names, because the large cap names which are bitten down and have good amount of short positions, those would be the space where we would first see short covering move. TCS is one name on our buy list. Primarily last 1 week, when we have seen some short covering and fresh long built up by FIS, IT is one space where we have seen some positive momentum. Today, no doubt, the entire market has seen some positive moves, but if you look at last 4 or 5 trading sessions, then IT was the first phase where in the FI short covering figures, those were the stocks which were showing an up move. So I think IT would show some good momentum. TCS among this pack look good technically also, with a stock below 1660, one can buy for target of 1960. And amongst the other large cap space, SGSC Limited is on the verge of forming a bullish engulfing pattern in today's trading session. The momentum readings, no doubt, are oversold in most of the cases, with a stock below 1520. Right. You can buy for target of 1800.
Okay, Ruchit, thank you so much. But since we are talking about financials, important to get a perspective from one of the top bankers in the country, Axis Bank. Well, the fact that it's a top Nifty gainer notwithstanding, the idea is to try and get a sense from Mr. Chaudhry about what is anticipated from the government or the authorities in order to try and alleviate the pain that almost all sectors, and banking in particular or financials, will go through, and what's the extent of pain that is possible in the first place as well. He joins us right now, needs no introduction, Axis Bank's MD and CEO. Mr. Chaudhry, good having you. Thanks so much for joining in. Good afternoon, Neeraj here. Would you anticipate a forbearance or such measure coming in sooner rather than later? I mean, the markets have probably taken heed to that, plus the US stimulus that has come in. Would you expect a large stimulus of sorts from our authorities as well?
Well, the finance minister was quite categorical in a statement yesterday that the economic package is being worked out and it will be announced soon. I'm presuming that a part of the economic package would include things like, interest rate cut, forbearance, something on NPA recognition, some specific help to sectors which have been impacted the most in this time of crisis, where the economic activity in those sectors have kind of completely shut down. I mean, if you talk about airlines and transport and hotel industry, etc. So yes, I'm sure the government is working on it. They have taken some tough, decisive action on managing this coronavirus issue, and I don't see any reason why we will not see that come through even on the economic side. There are sections of the society who are suffering much more than some of the others. Daily wage laborers, casual laborers, people who are working for some of the industries where you're already seeing large pay cuts. So I'm sure government will come out with some package of a kind very, very soon. And the reason it might be taking time is because I'm sure they want to ensure that the size and the shape of what they do is well thought through, and it is better to get it right rather than do it in a hurry. But I'm expecting some to come out pretty soon.
You reckon, Mr. Chaudhry, I mean, it's a no-brainer that there'll be a large economic impact out here as well. What to your mind would it do to, for example, banking earnings or otherwise? I mean, a lot of people are throwing various numbers about how if this stays on for the next 1 month or it will take away earnings for the next 3 or 4 quarters. It will plummet asset quality to levels that we haven't seen since GFC. What are your thoughts on this?
Standing today, it is very difficult to predict as to what the impact on asset quality would be. We know only one thing today, that country is locked down till April 15th. What happens beyond that still, remains to be seen, in the sense that, well, by April 15th, suddenly the country will open up, or we'll have to open it up gradually. So the key question is, when will the economic activity really pick up? And as a result, we will hopefully start seeing, companies operating, people getting paid, and hopefully the NPA crisis reducing in whatever form and shape it actually gets into because of this lockdown. So very difficult to predict. People are obviously speculating left, right, and center in this interview to start saying this is the impact and this is what we'll know. Frankly, none of us knows. But yes, as the banks have had the opportunity over the last 5 years to add a lot of capital, clean up their books. In our case, the impact will first come in retail, in my mind, for the industry, and then SME, MSME side. Our retail book is extremely strong. It is to salaried class. It is to existing to the bank customers. So we believe we are sitting at the other end of, from where the impact is likely going to start. But, it remains to be seen how big the impact is. And it all is dependent on how long the economic activity remains impacted. Sorry, go ahead. I think I interrupted you.
No, Amitabh, actually, you sort of partly answered my question. This is Ira joining the conversation. So tell me what you're seeing firstly across your wholesale book right now. Because, working capital requirements will probably start to go up. What are your customers telling you about what is going to be the impact on their payments in the next at least 1 to 2 months, and how are you dealing with it?
So, when the Prime Minister announced, or states started announcing the lockdown, the quarter was almost over. So the impact of whatever is happening in the quarter, which is going to finish soon, is going to be quite limited, if any. I think the impact is, the kind of full impact will start coming from next quarter onwards. As far as the wholesale side of the book is concerned, I think, all of us have pivoted, a lot of us have pivoted to better quality corporates. So I don't think today we are hearing that we'll not be able to make the payments to you. That is a very limited set of companies who are anyway a little bit under stress. But yes, if this continues, we'll start seeing more corporates talk about it. Some of the banks have already launched lines around giving them additional funding and extending their working capital cycle. I do believe that initially, because the plants are shut in many cases, you will actually see, as they sell the inventory, that money will come in and working capital cycle might actually reduce, or they'll get more cash in. But then, yes, when they start operating again, it will start ballooning from there on. Again, I would just like to say that it's too early to predict. We have to watch it very closely, and that's exactly what we are doing. I hope we can start seeing some positive economic activity happen by end of April or early May. But again, it's too early to call at this stage.
I understand that, Amitabh, but a lot of banks are saying that, look, we have largely higher rated corporates because the correction has happened. But this is not a situation which will leave potentially even higher rated corporates untouched. I'm going to use the example of the airline industry, for instance. You have large airlines saying that, okay, we will need some government support if we need to survive a period of complete shutdown. So I'm just wondering, is there anything the banks can do, or is this just sit on the sidelines and watch? Because I'm not sure whether the banks have any way to handhold some of these larger corporations if required.
Well, in some cases, depending on the quality of the corporate, the banks will obviously handhold, because they realize that the fact that people are going through this unexpected, and a very global scale crisis, no one could have planned for it. But so I think the good corporates will continue to get the money to wade through this crisis. It's the stressed companies which will, get squeezed further. And that's where exactly the intervention from the government is required. Please understand and appreciate that as per norms which exist, you can't be putting in more money where the companies are already in a stress state or in NPL, because you're just adding to your NPL. But I think the good corporates will get the support. And by the way, the larger banks are supporting some of these companies as we speak. In some cases, they have requested us for additional money, and we are disbursing the money because we know that we are backing corporates of the right kind. And when the economic activity comes back, they will actually get market share at that time because the weaker ones will maybe just shut down permanently.
True. A few more questions. So, this forbearance or classification easing that is being demanded and perhaps justifiably so, what to your mind would be an appropriate construct of that? For instance, the RBI says that, okay, you don't classify at 90-day past due NPA, you do it at 120 or something like that, or allow restructuring without being classified as NPA. And third point, what happens on the bond side? Because a lot, all your investment books hold corporate bonds as well. You may be able to do it on the bank loan side. How do you buffer the bond side?
So, all kinds of trade bodies, industry bodies are already in touch with the government and all kinds of suggestions have been given. I don't want to add to the pile of those suggestions. I think both the regulator and the finance ministry is fully aware of, what all the possibilities are. Yes, as you rightly pointed out, Ira, one of the obvious things to do is to allow some kind of forbearance, allow some kind of restructuring, give some leeway in terms of repayment on term loans, extend the working capital cycle, so on and so forth. Now, bonds is another instrument where, again, something needs to be done, where a concerted action is required. It's just part of the overall debt profile of any company or corporate, and we need to include them as part of any restructuring or any forbearance which needs to be given. I think we want the government and RBI to come out with something rather than the lenders getting together and trying to do something on their own. Industry-wide common framework of doing it will be much better, will be much more structured and hopefully much more seamless, and that's exactly what we are waiting for.
Okay. A couple of questions, Amitabh, on the broader sort of liquidity position as well. You've already addressed the retail NPA, so I'm not going to, go on about that. What is the liquidity situation right now? It seems like banks are holding a fair amount of liquidity. RBI seems to be providing it through various instruments. Some of those long-term LTROs, etc., are they translating into an increased ability to lend at all?
Well, the banking system has sufficient liquidity, but there is an issue in terms of, I would say a section of the banks going through a bit of a liquidity crunch, and that is got more to do with the fact that the mutual funds are facing a lot of redemptions, and they are selling. So the CD market is shut down. The corporate market is kind of also tight. In this times of crisis, some of the corporates also tend to draw down their lines. They just want to ensure that there's enough cash in their books. So as a result, there is a bit of a pressure in the system. I do believe it is partly to do with sentiment also, as this restructuring package, if I was to call it a restructuring package, is announced. I think some of these liquidity concerns will go away. So I am quite confident that this is temporary, and once the clarity comes through on how government and RBI will support the whole industry and the larger economy, the liquidity crisis whatever is happening should ease out pretty rapidly.
Are you facing any pressure on the deposit side from state government deposits in particular?
Well, let me say what I said in a call to our investors the other day. We are seeing our trend on deposits to continue in the same way as in the past. We had started gaining traction on our deposits. Our third quarter was really better than the first. Our fourth quarter is better than the third quarter. We have not seen any change in any of our, CASA or TD side whatsoever in the last 30 days. Yes, there has been a lot of noise in the system around some of the governments shifting their deposits from private to the public sector side. Some of those things are going to kick in April. We are in conversations with those governments. I think they had to react based on what they saw happen with Yes Bank. I'm sure over a period of time some of those concerns would ease out, because RBI has also been quite supportive and they've been telling the government that it's a wrong step to take. But again, to reiterate, right now, at least as far as Axis Bank is concerned, extremely comfortable liquidity situation, and our trend on deposits continues to move in the positive direction.
All right. A last question for me then. I wanted to understand what your perspective towards incremental lending is. I asked because, the corporate bond markets are right now virtually shut, the primary markets. Most of the incremental lending was happening from private banks, and it looks like private banks, as a combination of factors between what happened in Yes Bank and this, have turned a little bit more risk averse. So for a bank-driven economy, Where does that leave us, and what is your perspective on fresh lending at this stage?
So as I stated before, we are doing fresh lending, we are doing fresh disbursements. But yes, at a time of crisis, at a time when sentiment is negative, at a time when you are not even able to predict when the economic activity will start picking up, given the fact that we are in 21-day lockdown and you don't know post that what will happen and how it will be opened up, you have to be careful. I mean, you have to manage your risk. And it is only expected that all of us are asking the question whether the corporates who are asking for money are the right ones to do incremental lending to, or we should be watching it closely and try to see whether we can do slightly lesser amount of lending or structure it better or collateralize it better. And all of us are, I think all the institutions, including public sector banks, are doing exactly the same. I think the restructuring package or the economic package what the government announced will play an important role, and all of us are waiting for it to be rolled out ASAP.
All right, back to the studio.
Mr. Chaudhry, just one question. This is Devina here. So yesterday, a day before yesterday, we heard that we saw SBI announcing an emergency, credit fund for its borrowers and its customers. They've given a flat rate of lending as well. Anything that Axis Bank is doing with regards to, providing any kind of a fund, any kind of additional credit line to its borrowers?
Yes, we are doing additional credit line to our borrowers selectively. We have not announced a general, line which State Bank did. We will continue to be selective. We'll continue to watch our risk. By the way, I'm not implying SBI is not. SBI is a very, very large bank and obviously continues to get a lot of money flowing into SBI during these times. So I think they can afford to do it. They should do it. We are also doing additional investment, but just being a little bit more watchful.
Mr. Chaudhry, one final question. You raised a war chest at very comfortable levels as well. Since then, I know a lot of banking stocks have gotten hammered, but yours has been no exception too. Is this the fear of the environment plus the belief that the estimates around how slippages would be for you, irrespective of this concern happening at the end of quarter two numbers, quarter three numbers, leading people to believe that maybe slippages could be heightened? I just wanted your thoughts on, as things stand right now, would you believe slippages could be at a heightened level in quarter one and quarter two, or would they be largely contained?
Well, we are very focused on executing on the strategy which we have laid out. I think watching the stock price on a daily basis can cause more problems rather than solving any problems. So we try to avoid that. Yes, obviously there is very negative sentiment in the market. People are making all kinds of speculation, and everyone seems to be running through the same door. I'm very confident that when it all comes back, they'll be again rushing, trying to run into buying some of the stocks which have got hammered through the same door. So let's see how it plays out. As far as we are concerned, we have as I said, strategy laid out. We are executing on it. We all realize, understand, appreciate, and admit that if the economic activity is going to remain stalled for a long period of time, it will have an impact on our asset quality and everyone's asset quality. It's the question is, what kind of forbearance we get from RBI. The question is how long this stalling lasts. I'm quite confident that the way the government has moved and how strongly they have moved, that we should be out of this crisis faster than a lot of the other countries out there. And if that happens, hopefully the impact on the asset quality books of a lot of the banks will not be large to actually really make an impact, make a very large impact to either our capital or our profitability. And that's what the hope is. Only time will tell. I'm sure we'll have an opportunity to talk again in the future, and if we have more clarity, we can give you that clarity.
I cross fingers for all of that and more, not just for your bank, sir, but for the system at large. But thanks so much for joining us today and talking to us. That's the view from MD and CEO of Axis Bank. Let's wait and watch. I think all eyes are pinned on what the government does in terms of the economic package. The forbearance is now being used pretty regularly. Let's see if we get something by this weekend. And if so, what happens to some of these banks? As I said, today's a bit of a surprise move in that the reason I'm surprised is that despite Reliance being up so strong, it's the banks which are doing better than what the Nifty or the Sensex are doing. But since we are talking to Axis, Ruchit, you want to come in with a quick view on the chart side on Axis as well? It got hammered out of shape. It's bouncing back today, albeit not as strongly as a Kotak and a HDFC Bank. And it's off from the highs of the day as well.
Yes, I think, if we look at the relative performance of Axis compared to Kotak or HDFC, then it has been an underperformer not only in this correction but also previously when the banking space was doing well. At that time also we had seen that Axis Bank was an underperformer to the other two names. So I think even if you are a long-term investor or considering buying into the banking stocks within these beaten down private sector names, then HDFC and Kotak will be more preferred.
Okay. Axis certainly slipped from the highs of the day. You got to keep that at the back of your mind. I wonder what Kotak and HDFC Bank are doing. They should come up on your screen. Kotak was up 12% when we started the show. It's still up about 12%. HDFC Bank about 9.5%, and that's up a solid 10% as well. So those two continue to shine. I must say the third cousin, which is Bajaj Finance, is not having as great a day. It is up in the green, yes, but just about 4.5%. So nothing quite spectacular for this one. Typically, those three tended to move in tandem across a lot of portfolios, but in today's session is slightly different. What else? We saw Godrej Properties having a field day today, about 12.9% or 13% higher, so about 644 and counting. So do watch out for that one. Motilal Oswal has bounced back today, so 505 for that one too, in line with some of the other NBFCs. This one too has had a fairly decent outing in the session today. Let's see if these moves last. Devina, what else are you spotting?
Well, if you got to see the broader end of the spectrum, Neeraj, ICICI Prudential is up 27%, and that's really got a big shot in the arm today. 323 on the stock for that one. Along with that, 1222 on an NIT Tech, that's up 20%. Then you've got a Hathway, which is up 20%. And Muthoot and Manappuram Finance both have been doing well. So that's about 18% apiece, 17-18% apiece for these names. The NBFC space as a whole is, up and active in today's trade. Ujjivan Financial is up. You've got Interglobe Aviation also, like I highlighted earlier on. This is up. LIC Housing Finance is up 10%. So there is activity across the board. L&T, the big behemoth in the infra space, which has been a laggard up until now, has given some returns in today's session, so about 8% higher for Larsen and Toubro. Fertilizer stocks are active. There's some activity in the chemical in the specialty chemical space as well. But a few names actually, within that pocket itself that are seeing a little bit of pressure. One being Vinity Organics. That stock has not, despite the many clarifications that the management has actually come out and made on our platform and on other various platforms, that seems to be just about flat. I guess, the word will be out once the results get reported. But Vinity Organics, quickly, Ruchit, on the charts.
I think the short-term trend still continues to remain down, and as I said earlier, that our focus, at least for short to medium-term traders, focus should be more on the large-cap space rather than catching a falling knife in the mid-cap space. Because if the tides turn, and it would be.
The cabinet is making an announcement.
दे रहे हैं एडवांस में सामान मिलेगा, इसकी व्यवस्था की है. दूसरा, जैसे आपको पता है केंद्र सरकार के सभी नौकरों को तो तनख्वाह मिलेगा ही, लेकिन जो कॉन्ट्रैक्चुअल लेबर्स है उनको भी उसमें तनख्वाह मिलने की कल निर्मला जी ने घोषणा की है. प्राइवेट को सारे कर्मचारियों को और बाकी सेवा देने वालों को तनख्वाह देने की जो मिनिमम वेज है वो देने की बात कही है, और रिस्पांस बहुत अच्छा है उसको भी. सिवाय ये केंद्र और राज्य ऐसा अलग अलग नहीं है, सब मिलके कर रहे हैं, और इसलिए राज्य सरकारों ने भी अगुवाई की है. हर राज्य सरकार ने कुछ न कुछ पहल की है. कहीं फ्री अनाज किया, कहीं कुछ किया, तो हर राज्य सरकार भी अपने अपने तरीके से काम कर रही है. इसका भी स्वागत है, और इसलिए गरीबों को नहीं, सबको वस्तुएं मिलेगी, सेवाएं मिलेगी. साथ साथ जो गरीबों के लिए, जो कॉन्ट्रैक्चुअल मजदूर और दिहाड़ी पे काम करने वाले ऐसे लोग जो है, उनके लिए भी व्यवस्था है, और सस्ता अनाज या कहीं कहीं फ्री अनाज भी दिया जा रहा है राज्यों में। एक मेरा मुद्दा निश्चित है कि अफवाहों पर विश्वास न करें, क्योंकि ऐसे समय इतनी अफवाहें फैलती है, इतने विभिन्न फोटो आते हैं, वो इस देश के है कि नहीं ये भी पता नहीं चलता। लेकिन इस तरह से बहुत सारी अफवाहें उठती है, उस पर विश्वास न करें। इसके लिए सही जानकारी के लिए स्वास्थ्य मंत्रालय ने जो उनका डैशबोर्ड है mohfw.gov.in वो शुरू किया है। ऑलरेडी अच्छा चल रहा है, सारी जानकारी लेटेस्ट हर घंटे की जानकारी मिलती है और आपके कुछ सवाल होंगे तो उसका भी जवाब मिलता है। अभी हर राज्य को कहा है कि हर जिले में हेल्पलाइन शुरू करें। बहुत राज्यों के हेल्पलाइन शुरू भी हो गए हैं और गृह मंत्रालय भी अपना एक खास हेल्प नंबर आज घोषित करने वाली है। तो मेरा मूल मुद्दा इतना ही है कि एक सकारात्मक पहल, एक सकारात्मक सहभाग जनता का मिल रहा है। आज कैबिनेट में 4-5-6 निर्णय हुए हैं, वो भी संक्षेप में बताऊं। पहले तो रीजनल रूरल बैंक्स, अनेक सालों पहले जो नेशनलाइज्ड बैंक के आधिपत्य में ही रीजनल रूरल बैंक्स बने ग्रामीण सेवा के लिए, उनमें कैपिटल एडेक्वेसी रेशो, कैपिटल टू रिस्क जो 9% चाहिए, उसको मेंटेन करने के लिए 1340 करोड़ रुपए की योजना बनाई है, जिसमें केंद्र सरकार 670 करोड़ देगी और 670 करोड़ रुपए विभिन्न बैंक जो उन आरआरबीज को देखती है वो करेंगे।
All right, that is the briefing, and we'll keep getting you more details from there as and when those decisions are being announced. But the markets deserve all the attention at this point. We've come off the highs of the day, but still about 8,300 plus is where we're trading at. So if we close around these levels, that's definitely going to be an incremental positive. Yogesh Mehta is joining us right now to take us through his views as well and what today's move is done for him. Yogesh, good afternoon to you. Let me start talking about the fact that whether or not you believe that this could be a rally that can be taken up ahead, or this could be just an exit point for people who are waiting for a slight bit of a bounce so that they could exit.
Hi, good afternoon. Since this is a fantastic rally, and I guess that I believe that nobody would have expected this kind of a rally at the start of the day. But I think that this rally could be a good opportunity for those who have not exited so far from their portfolio stocks for a churning purpose, because the market is throwing so much of opportunity into private sector banks, top names, but they've corrected by 40 to 50%, and people were dying to buy it every day. And that was the opportunity. So it is the right time to still for quality stocks to get in. And as far as Corona is concerned, this rally can fizzle out further if there is any further negative news spreading Corona across the world, or especially India. And this is the first day of lockdown announcement. And I think people have discounted that lockdown was already expected, and that's why maybe we are seeing short covering rally by institutional participants. So I would say that yes, it would be a good opportunity because the stocks are soaring 20, 22%, maybe some of the cases 30%. Then these are the opportunity. If you have bought at lower levels for a 20% gain, you are getting it very well booted.
India Wix also in today's session has come off. It's at about 77.66, come down from levels of about 83 in yesterday's session or a day before that. So that's starting to cool off. We've been tracking what the fact that India Wix has been doing globally as well. So CBOE Wix in the US has been coming off too, where some believe this could be a function of lesser hedges in the system. But Yogesh, any specific indicator that you're watching out for before you make a larger investment? I mean, right now is the time where you take smaller, nibble into the market, smaller ticket investments, but anything that will convince you to put a slightly larger chunk of money?
Yes, Devina. For that, I would wait for just one more week. And in stage 3, there is no spread of corona in India. because all the economic parameters and the next week RBI meeting, everybody, and I'm expecting 50 basis point rate cut. So putting all together, the macro and the micro indicators and the factors are already in place and the ingredients are there where all the negatives have been factored in. So I would say at that point in time, if there's the external factor of corona, if it plays out well, because US markets are getting funded with multi-trillion dollars. So I think this should give some kind of a relief to all the economies. And we have to fight with at-home GDP growth and the inflation and all together and other numbers. So I would say that yes, one can build a portfolio with a vision of 2 to 3 years, and definitely I will buy the stocks at current prices also, rather than waiting for further correction of 15-20%. Because what I have seen in some of the parameters, if I talk about the fundamentals, there is no change overnight. Still, there is a detrimental and a detrimental negative are factored in. But on technical front, I think 6,300 to 6,800 should be the bottom, with worst case of corona priced in. I would say for long-term investors, definitely these are the price to get into the stocks and build a portfolio for the fresh who are watching the stocks to decline and waiting on the sidelines. And definitely I would say for long-term, any price is good price still, even if the stock have gone up by 10, 15, 20%.
Yogesh, let me ask you a slightly more pointed question. Right now, if you are sitting down and making a list of stocks that you would have wanted to be in, and an opportunity comes where you believe that it's probably the right time to invest that larger chunk of money, one or two stocks of conviction that are there on your list to buy right now?
Yeah, Devina, I have already prepared my list, and I was preparing and fine tuning on that. And if I have to name only one or two, then definitely I will go for the insurance sector, number one, which is the most likely to me. And HDFC Life, though I have bought at lower levels as well, I'm accumulating it. So that's a disclaimer. But that is one insurance sector, I would say ICICI Pru and HDFC Life. These are the two names. And if I have to go for the third one, then ICICI General Insurance. So these are the three names where I would put in my money for at least next 3 to 5 years, and comfortable putting money at current juncture as well.
Okay. Yogesh, just before we get in Manav Chopra, Yogesh, just one follow-up. IRCTC, you track that closely. It's down 5% again today. How much for the pain here?
Neeraj, this corona spread has given some kind of negativity for this, because the new bookings would open are closed till 14th of April, and the whole the vacation season, the peak season which is there for the booking for railway and the catering service altogether will have some negative impact for the FY21 numbers. So I was expecting 740 to 760 crores profit for the next financial year. That may come down to 650 or 660, but overall the EPS would be around 35 to 36 rupees even. Then it is available at 22 times. At lower circuit also, I think at one or two lower circuit or current price also one can accumulate. And this is just a fear factor. This is not a permanent factor that it will remain there. And once it is over, after say 2, 3, 4 months, we can have this without railway booking. Nothing is possible in India. So I would say yes, one can go for that. And one more contrary argument would be thread would be that even if airlines have been grounded for domestic as well as international airlines, Indigo is not going lower circuit, then why should IRCTC should be there? This is just a margin call or maybe some external factor which is driving down the negativity or negative factor for the price, but it is a good opportunity for investor to get into.
Okay, Yogesh believing IRCTC might be a good idea to get in, accumulate slowly. That is his view for the next couple of days, if indeed it goes down further, buy more. Now, let's get in Manav Chopra in the discussion. And Manav, when you look at, we'll get to the index view too, but when you look at large cap names, there are some names that have a trending move throughout the day and some which come off from the highs of the day. Reliance, strong stock, but has come off from the highs of the day. HDFC Bank is now trading at the day's highs, 858 rupees, up a whole 12%. How do you look at these two or three heavyweight companies, Reliance, HDFC Bank, and I'll add a slightly underperforming Bajaj Finance there?
If I could take a call, definitely Reliance and HDFC stands out very well. NBFC space, at least for the near term, will still face some bit of selling pressure. Importantly, that Reliance has tested its important 2018 lows, and a very sharp reversal was witnessed from there on. I feel the sell-off from the intraday highs seems quite for a very short-term temporary basis. Given a choice on the lower side, 1,000 would act as a very important support for Reliance. And as an important cushion, I expect a retest of its 1130, 1150 highs in a very short-term perspective. In fact, HDFC Bank was one of the stocks since past couple of trading session was witnessing selling pressure, and Kotak's bank was actually witnessing buying. So today is a day where the stock has violated its previous 2 days highs and has seen a decisive break above 830 levels. So going forward, if I have to take a call, maybe HDFC Bank would see some more throttle on the upside. For near term, I think 900 to 940 could be the range where the stock would see a short-term upside range towards.
Just looking at the MRR function of the Nifty Bank, and while obviously it is the front runners that have led the Nifty Bank higher by 8%, there are a few laggards. So IndusInd Bank continues to toil. You've got down about 3.5% today. Bandhan Bank is down about 3.5%. So Bandhan Bank, the new entrant into Nifty Bank, which replaced Yes Bank, has also come at a really wrong and an edgy time. But Neeraj, you were talking about the mother market, and I just want to actually take a look at what the Dow futures are doing. The Dow and the S&P futures, after yesterday's big move that came in from the US markets, it's also looking like today's session could turn out to be another day where you could see a day of big greens coming in from there. So the Dow futures trading higher by about 700 points, the S&P 500 futures trading higher by about 48 odd points. Now, not to say that we're really getting excited about this rally, but it looks like at least on ground, and since we're tracking the mother market, it's pointing towards the right direction.
Yeah, Devina, and pertinent point, simply because after the big move yesterday, this morning when we started trading, the Dow futures were trading absolutely flat, and now they've picked up as well, so 3.5%. Important to put in the European markets into perspective as well. Remember, ahead of the Dow move yesterday, they closed in the green, and currently to about 4% higher. So world over, there's a bit of a risk on led by the Fed. I think, which is why Devina's point is well taken, that when the mother market is doing so well, it's very difficult to be in a risk-off mode. And frankly, a lot of people believe that these moves taken of the lockdown might actually help contain, and therefore that might also be interesting. So, yeah, pertinent points there. But Devina, let's see. For now, a lot of people call it a dead cat bounce. Let's wait and watch if it remains that way, or does this continue further. But banks and Reliance Industries, you can't follow the markets when both of these are doing so well, Devina.
Yep, I also want to pull up a few other names. Now, since you mentioned IRCTC, in that same basket, Neeraj, we kind of put all these and club them together, these new listings, specifically the likes of an Affle India, the likes of an India Mart into Mesh. So, while IRCTC is doing what it's doing, I mean, it's important to see, what lies ahead for the likes of an Affle, which had any which ways run up a lot post its listing, to an India Mart into Mesh in this entire sell-off that we've seen. Probably, slight bit of an outperformance versus the rest of the pack. But Yogesh, that's what I want to come to now. While we've spoken about IRCTC, let's shift focus to the likes of an Affle and an India Mart into Mesh. Business is definitely going to get impacted for them too. It's not like they're going to go unscathed. And in fact, this is going to be an area of further pain. So what are the right kind of levels to watch out for? Because the business is not going to come back for at least a few months now.
Yeah, Devi, if we have to look at all those in this category, Affle India or the India Mart Intermesh, then I would say stick to the leader where we are certain about the earnings projections for those companies, because these companies have not delivered much kind of a numbers in if we accept it the last 2 quarters, but yet also at current juncture also looking at this slowdown and then reopening of this probably 2-3 months, so Q1 or the last quarter of this financial year would be a problematic. But I think these are the opportunities. Then again, Affle and as well as India Mart, both are a good opportunity to get into at current prices as well. But I would say that it should be an accumulation mode rather than getting it at a single go.
Well, last 4 or 5 minutes left for the markets to shut shop. First, getting closing strategies, and then some more thoughts from Manav as well as Ruchit. To Manav, I'll come to you first. Your top closing strategy for the day first.
Yes, so my first call would be a buy on Escorts. In fact, Neeraj, this has been one of our good outperforming stocks in the previous run. And since the prices have formed a very strong support base around the levels of 600, 620, I believe in the near term, this stock would hold on to its important support, and the volatility is also indicating that a positive breakout could be witnessed on the upside. So this stock is a buy with a stop loss of 635 on the lower side for a BTST trade also, and for a short-term positional for an upside target towards 665. The other stock that I like is Dabur. This is from the FMCG space, and in fact, again, the stock is testing its important crucial support levels and has an important support around the levels of 385. It's a buy with the stop below 385 for an upside target of 430.
Ruchit, what about you? Your top closing strategy?
I would recommend going long on HDFC Limited, although at the start of the show also I have recommended for short term, but even from a BTST, if one has to take a trade, then one can go long on HDFC Limited. The stop loss target will be different for BTST. One can go long with stop loss below 1590 for target somewhere placed around 1770.
Okay, very quickly, Yogesh Mehta, there is a fundamental call, and we'll take in Manav's index strategy or index view post-market close. But Yogesh, one word on Polycab, that's the other one that a lot of people are talking about. Valuations are a lot more comfortable. There has been a bit of a fall. Would you be a buyer here?
You took my words from my mouth, and I was about to tell you about the Polycab itself. And yes, it's a very, very strong opportunity because the 12 to 13% market share and the consistent earning visibility, as well as the delivery they have delivered in last 2 quarters or 2 years. So I think with 20-25% CAGR growth rate for over FY21 and 22, the visibility is still strong. I think one can go for definitely go for Polycab, and it has corrected from 1100-1200 rupees to now less than 600. So around this current prices, one can definitely look at this company, and it is going to wonders from here for next 2 years.
All right. The other one I want to talk about, and Yogesh, I'll come to you only with this one, since we're talking about price value right now. Is there value that you see in SBI Cards, which is now at about 617? I mean, in any different environment, this stock probably wouldn't have traded below 1,000, 1,100. You're getting it at a price of 617. Would you take that bet to go ahead and go long on an SBI Cards right now?
Yes, I think pre-IPO we discussed, and I told you that I mentioned that 1,000 rupees is too expensive with the 10.5, 11 times price to book. But I think at this juncture at 600, near to 600 rupees, definitely it's a buy, and one can hold on because this slowdown or the corona will not have any impact on your buying of digital purchase and digital transaction at all. And the growth will remain same. There is no deterioration into the earnings visibility, and there is no comparable entity we have at present in the listed space with India. And definitely 600, 620, whatever may be the price currently, one can definitely look at buying it. And even if there is a decline of 10% more, then definitely it is more attractive.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your perspective. Appreciate your time. We will take in closing thoughts from both Manav as well as Ruchit, but 2 minutes left for the markets to shut shop, and it's important to highlight how the day's trade has been. So the Bank Nifty ruling the roost, and well, maybe it should, because the likes of Kotak and HDFC have had a trending day today and are closing in at the day's highs. Let's pull up those individual counters, the intradays of those names before we move on to the other things. This is the Nifty Bank, 8.4%, and look at HDFC Bank, look at Kotak Bank and the kind of moves that they have made. Quite spectacular. This is 859, about 12% higher, ending at the high point of the day. Kotak Bank, not exactly in HDFC, but if you look at this, 12% higher and almost ending at the high point of the day. So really good going. And then you can't not talk about Reliance Industries today because of the kind of move that the stock has shown. So very strong show. Not at the high point of the day, but a 14% up move is pretty spectacular from Reliance Industries, and on pretty good volumes too, I must add. Now let's get the heat map, then we'll get the MRR function for the mid caps and the small cap indices as well. But first the heat map. And what else? Those three are the top draws. Then you have a UPL, which is 11.5%. Maruti is not at a bad day, about 10.5%. HDFC about 10% higher as well. Axis Bank, I think the disappointment, if any, to people's minds would be these two names, Bharti Airtel and Bajaj Finance. On a day like this, they've underperformed the benchmark index itself. Usually these would be the front runners, but they've kind of underperformed the benchmark. Infosys, after having a really good run the last few days, is taking a bit of a backseat in the green, but just about 2.5-3%. Mahindra and Mahindra, about a 3% up move as well in the session today. And cement probably has not had a terrible day. I think Ultratech has at least about 5% and Shree Cement just marginally in the green. What is not doing well is IndusInd Bank, IOC and Coal India. And watch out for Wipro, that's that lone ranger on the IT side, which is actually in the red. Get the MRR function for the mid cap and the small cap indices and just show you what's happening at that side of the markets as well. as we get ready to shut the markets, by the way. But Max Financial, 15%, Muthoot and Manappuram, about 14 and 13% respectively. Godrej Properties, about 12%. Nippon Life India Asset Management, about 10% too. And Bata India is at a 9% up move. What's not done well? Well, Edelweiss, 5%. Indiabulls Ventures, 5%. And AU Small Finance Bank corrects a bit, about 7% lower. The small caps, if we can just very quickly have them on the screen, and that's the other pocket. NIT Tech, about 19%, MCX about 15%. There is strength in TV18 Broadcast, up about 10%. What's not done well? Spandana Spurti down about 10%. Indiabulls Real Estate down about 5%. And KEC International about 4.5-5% lower. IndiaMart Intermesh, by the way, stands out too. Actually, that whole pocket, IRCTC, IndiaMart Intermesh, AFL, all three of them down about 5% apiece. And the volume should come up on your screen. The contributor should come up on your screen. The market breadth would have crisscrossed during the course of the day. But this is the volumes. We crossed 40,000. Easy to predict that. 42,000 on the volumes front. The market breadth or the contributors would next come up on your screen. Well, as I said, a bit of a crisscross here. And then the number of advances outweighing the number of declines by a margin of, 2:1. And then the contributors, no surprise there on the gainers. ITC losing out a bit in the session today, but a strong day in the green. Let's wait and watch if this gets reenacted. Anyways, closing thoughts from our experts. And Mana, I'll come to you first. We didn't quite get your index strategy. How does this move set us up for the next few days?
See, the markets have seen a very strong reversal today, particularly in Bank Nifty. It formed a bullish engulfing pattern. And the candle which was formed yesterday, Neeraj, was a hammer. So a bullish hammer followed by a bullish engulfing definitely indicates a short-term bottom in place. I will not say, the bear market is finished and from here on a new bull market will start. So I believe there will be a strong retracement rally which would come in, a move of at least for the Bank Nifty, a move towards 19,500 odd levels or close to 20,000 odd levels, the kind of a strong reversal that HDFC Bank, HDFC Limited, Kotak, and these large cap names have formed today on the daily charts. It will be unlikely that it could get negated on a very immediate basis. There could be some choppy session, but eventually a move on the upside. So for now, I believe one can maintain a buy on dips approach for the Bank Nifty. On the lower side, 17,600 to 700 would be the support. I expect targets of 19,500 to 20,000. And for the Nifty, I believe for the near-term perspective, 8,600 to 8,800 would be the likely upside target.
Okay. Ruchit, what about you? What is it that you're going to be watching out for trade come tomorrow? And if you've been tracking and monitoring even what's been happening in the derivative space, how does that align?
So there are three data points, which were quite negative in this market call. One is the FIS cash, FIS selling figure in the cash market. Second, in the future segment, they were net short throughout the last couple of series, and the India VIX, which was continuously rising. Now, out of the three data points yesterday, two data points turned positive. One of them was index futures positions of FIS, that the long short ratio, as I discussed earlier at the start of the series, it was around 12%. Now, in last 1 week, they have covered much of the short positions and have even created fresh new long positions, due to which the long short ratio on index futures as on yesterday was around 54%. Even if you look at their stock futures position, then about 67% of their total stock futures positions are on the long side. So I think, yesterday this was the first indication where the FIs have now turned, majority of the position have turned on the buy side in index futures. Secondly, India VIX today has dropped marginally, which is again a good sign that in case if we see a reversal in the India VIX, then that would be a sign that we should see the extended pullback move what we are seeing today. So only one thing now which continues to remain negative is the FI cash figures, which needs to be seen today. In case if there is a cool off in their selling figures, then I think that would again be a positive thing for the market. So this is what I would keenly watch for, what the FIs do in the index futures today and also in the cash market segment. Secondly, as I mentioned, as far as the levels are there, the retracement levels on Nifty spot is coming, our minimum retracement levels of 23.6% is coming around 8,650, and on Bank Nifty around 19,800. So I think these would be the levels that I would watch for in tomorrow's in next couple of sessions.
All right. We'll leave it at that, gentlemen. Ruchit as well as Mana, thank you as always for joining us on the show this afternoon. Well, and on that note, it's a goodbye from Neeraj, myself, and the entire team that's put this show together. Remember, it's just 21 days. We all can do it. Social distancing is the key. Staying at home and staying safe is crucial at this point.
According to a recent report, women today